Good afternoon, everyone. We've got a lot of you joining already, so we've got a great turnout today. We're just going to give it a little bit more time to let people join. My name's Tom Jeffrey. I'm one of the education and media technicians at Caseware UK. And as you can see, we're going to be looking at disclosure of brought forward figures. That's an introductory level webinar. We're going to aim for around the half an hour mark today. I'm doing this all in the wrong order, of course. We're going to aim for around the half an hour mark today, but we've got a lot of content to cover, and that content is going to be covered by Anthony Launchbury, our Senior Education and Media Consultant. I'm just going to jump onto some housekeeping, and then we'll get started with the webinar. So you can use the Q&A option there to raise any questions that you have. As I say, we've got a lot of content to get through. We're going to try and fit it into the half an hour, but please don't let that discourage you from submitting your questions. We'll try and answer as many as we can. And if we don't answer on the session, we'll get back to you afterwards during the follow-up. We're also recording, so the recording will go onto YouTube and onto our help site. So you'll be notified in the next couple of days when that content is available, and then you'll be able to rewatch and share with people that weren't able to attend. That's the housekeeping out of the way. Very quick, so I'm going to hand over to Tony, and we're going to get started with the content.
Thanks there, Tom. And yeah, thank you everyone that's done up today. I'm not sure what the numbers are yet, but 93, 94, so 96 now. So they keep going up. All right, so I won't take too long. As Tom said, we are quite time pressure for this, so only being half an hour. But just to revisit what the point that Tom made is that I'm sure that with the number of you that's turned up, there may be a few queries in areas that you're having difficulty with, like brought forward balances. So do stick them in a chat field, because I will 100% reply to you after the call if we can't answer the questions on the webinar, okay? And I will get back to you with some nice clear instructions on how you can tackle those issues that you're facing, setting up files or rolling forward files. So with that said, hopefully everyone's seen the agenda on the screen. That's the main focus, okay? When we look at brought forward balances, there's always particular areas that are real sticking points on setting up files. So that's where we're going to start off with, okay? We've got examples for all of these, and I'll really try to get through this as quickly as we can do, but not rushing them, so we can get Q&A at the end, okay? Because it is important that we give you time to ask any questions that you may have. Now, these are the areas, these are predominantly the areas where we get the most of our support queries with brought forward figures. Top of the list, fixed assets, and not necessarily in order at that point, but stable and change equity is probably the most common after that as well. And how do we deal with small rounding issues on brought forward balances? It's usually to do with the brought forward profit figures and the prior year table analysis not quite matching up to the current year. When we go through, I'll give you explanations why as well, okay? So you've got some understanding about how roundings are applied. So it makes a little bit more sense of what Caseware's logic was when they set these up, so you know how to use them, okay? So with these in mind, then we're going to definitely be focusing on fixed assets first. And this is because it is an issue that each of you will have to face when you're setting up either new clients or if you've migrated to Caseware Desktop. And it comes down to this, really. It comes down to the level of detail that we see in clients' ledgers. Now, on the left-hand side, they're not quite Sage codes, are they? Because it's not 0030 and 0031. Excuse my rushed example slide putting that together. What you can see there, though, is that if this was the client's Java account, so we were relying upon that client TB and importing it into our Caseware Desktop file, it doesn't necessarily come with the right level of detail we need for preparing statutory sets of accounts. There's no impairments, there's no depreciation charges, disposals, or any of that nice interesting stuff, which will be sitting in each one of these rows for office equipment, fixtures and fittings, and obviously for the motor vehicles as well. Now, what we're looking at tangible fixed assets will also apply to intangibles and other areas within the template. So use this as we go through for other areas. You'll be able to apply the same approach. So what we're going to do is we're going to jump into an example file, which is actually looking at exactly how do we tackle this. Now, as we go through, remember, please do ask questions, put them in the chat field. I'm sure you've got your own similar queries that may be related. If I don't touch on those, then I want to make sure we do follow up on them. Okay, so do add those into the chat field. Now, I'm just going to go through, and as I said I would do, is open a Caseware file. and I've got a couple open because when we set up our rehearsal, I was a little bit over the allotted 30 minutes time. So we spruced a few bits up. So I've got a couple of example files to hopefully speed things along. Trial balance, as you can see here, this is the main area. So this is where I wasn't so lazy, and I have my 0 zeros in there for those nominal account lines, so matching up to the Sage chart that counts. Now, if we just go through and map your TV, cost brought forward, freehold property, depreciation brought forward, plant brought forward, plant machinery brought forward for depreciation charge, then we're going to see some errors in the face of our accounts. Okay, so I'm just going to go into the file one. F1 is the file one, if anyone's wondering why that is ML 2023 F1, which will obviously lead you along the lines. We will go to F2 a little bit later. Now, when we're in here, you'll hopefully all be familiar with this red banner. When you first see it, there's normally got some larger figures on it, and medium-sized companies, smaller entities have normally just got small rounding errors on it. This file, we kind of structured it so we're looking at these two areas really. So we've got statement of changes equity, and we've also got the statement of financial position. Now, my usual rule when we look at any of these balances would be to look at where we've got the most impact. So I'd always try to point you towards where we've got the larger figures. Not to say that we'll be happy with this statement of change equity difference, which, just to make that nice and clear what it is we've got, well, our profit and loss reserve here, where we've got a £1 rounding difference. Now, as we go above, and I look at the at 1st of January 2023, within the current year table, it's showing as 1104402. So that difference, then obviously that one unit is looking at that total there and the brought forward balance up here. Okay, so we will have a look at that. But as I said, it's not going to have the most impact on our file. It's numerically, obviously, isn't right, but it's not material compared to this, where there is a larger issue when we look at our balance sheet. Now, when we look at the difference on the balance sheet and you set your files up, you'll go here and you'll see, okay, that your net assets or liabilities don't add up to what the overall reserves add up to. So the 1204 and the 1328. Now, it's quite easy to check these, so I'm sure we will check those first, because just a matter of fact, okay, that was the brought forward balance. We're happy with that. We've already seen that on the statement of change equity, haven't we? And if we look at this here, revaluation reserve, it won't take us very long to check these. So once we have, the usual offenders will be at the top of the balance sheet, and usually relating to tangible assets or intangible assets. So these are where I'd always advise you to start. Now, looking at it straight away, we've got a net book value here of 423401, and we've got a net book value here of 423401. From this section here, I think the advisable thing to do would be to look at the note, wouldn't it? So you'd click on the note 13, you drop down to the tangible assets note. To try and tidy this up a little bit, to make it a bit easier on the eye, maybe we'd try and hide the blue rows, the skip text rows, and you can do that from presentation, the skip button, or table, and the skip button here. Or you can just go into print preview. So I will just go into print preview to show it as it will be printed. So once this loads up, then we can say, well, there we go. So we've got cost and valuation, we've got brought forward, and we've got depreciation brought forward, and we've got a closing position. And that's it. There's no movements in between. There's no depreciation charges. There's no additions or disposals. So that's where we need to start. So this is going to be a good indicator to you to let you know that you need to start building some more detail into your trial balance. So closing that off, then what we'll do is I'll show you another area which is going to kind of allude to that for you. Okay. Back in the working papers, there is a tool that you can all access. I'm not sure if everyone knows where it is, but hopefully you've got a colleague or you've been on some training where you found this out before. If not, and it's new, what you do is you will click on the home button, okay? And on the right-hand side, I want you to go to other docs. Now, from other docs, you're going to have a few choices there, but I want you to go straight to the middle for TV diagnostics, okay? It will open up a document called the diagnostics document, and it will allow you to pinpoint areas where there's problems within your accounts. Now, the first thing I would start looking at here is maybe potentially removing the skipped lines. I don't really want to go through the table and look at all the bank lines, so you can go to view and you can remove skip text there. that makes it a little bit easier. Let's navigating and scrolling up and scrolling down. So when we're here, I'm not focused on these areas at the moment, okay? I just want to be focusing on the tangible fixed assets, as I said, the top of the balance sheet, and we'll start with freehold property. Now, I'm only going to give you the example and demonstration looking at freehold property, because it's going to be the same process as when you look at plant machinery, cost and depreciation, okay? But again, as mentioned, just to make sure we have got enough time to answer questions, I will only be looking at freehold property cost, okay? So that pointed in, when you're on this document, it doesn't tell you necessarily what is wrong, but it points you in the direction of where you need to look. So it says in your prior year that you had a closing position of depreciation there of £23,204. And then over here, you had an opening balance brought forward of 28,425. So how did we have a closing balance of this with no movements and ended up here? So it tells us what the difference is, that 5,221. So that's what we need to focus on. And that's going to be exactly the same as for the plant machinery and also the plant machinery cost and also the plant machinery depreciation. Now, we've also got freehold property cost on the screen, haven't we? That doesn't necessarily, just because there is no red warning on the right side, doesn't necessarily mean we've got it spot on right. So I would advise, even though there's no red warning there, if you see an issue somewhere on freehold property, just to review all the freehold property balances to make sure they're right. Okay. So what I'm going to do quickly, I'm just open up another file to the side. So I've got my notes with me. And then whilst we go through, I'll just, there we go. So resume screen. So on this point here, I'm not going to close this down. I'm just going to minimize it. Okay. So I'm going to go to the top, minimize that down, back in my file, and I'm going to have a look at my trial balance data. Now, when I look at my trial balance data, then the holes I need to plug are here. So freehold property cost brought forward and freehold property depreciation brought forward. Now, looking across the line of the trial balance data there, it doesn't look like there's been any changes. There's no issue. In 2021, the property was valued at 319. 2022, also 319. Maybe we need to look at a revaluation here somewhere along the lines. However, it doesn't look like there's any additions or disposals or anything along those lines. Okay. However, as I said, there may be some, maybe a note there to think about, consider a revaluation. Now, from my side though, what are the holes? So the holes could be, well, that's brought forward. If I open up, expand this window, it will give me the map number description. So we've got A02 for additions, we've got disposals, we've got revaluations, we've got transfers between classes to consider, transfers between groups to consider, foreign exchange movement. So there could be a fair few holes there, couldn't there? And that goes you down these lines here. So from row 1 here to row 13 down the bottom, which I know isn't exactly 13 rows because we don't have a 03 and a 07, but you get the point. And then when we look at depreciation, 51, well, we've got the same issue, haven't we? So if we look at 51, we've got that same issue. We've got, well, it could not just be depreciation. It could be the charges, disposals, revaluations, again, impairments, and all of that nice, interesting stuff. So when we set up our TB based upon our client's chart of accounts, we also need to be considering these. For this example, I'm going to keep it nice and simple. I'm going to set it up in an additions account because it's not going to take me very long. So just in case, I can go through and go, okay, new, and then I can go 001. I'm going to say that the additions account is going to be 0011. Okay, so then I'm going to go freehold property and then additions. Now, at that stage there, you can just use the drop down, expand freehold property from tangible fixed assets, and select my additions row. Okay. Now, I don't necessarily need to use that this year, though, as I've already said. But just to go through and building accounts in, you can see it's quite easy and quick for you to build those account codes in. Now, on this one here, though, what I definitely need to look at is my freehold property depreciation. Now, we can see an issue here, can't we? We can see there's 17,000 there, there's 23,000 there, and there's 28,000 there. So really, then what I should be expecting to see is a new account code. I'm going to say this one is 0016, depreciation, this time charge, and this we're going to say this is on owned assets, so rather than leased. And I'm going to link that through to the map number again. So A01, 01, 00, and this time I'm going to select 51. By the way, there are two depreciation charges. One's for owned assets and one's for 52s for owned. If there's leased assets, then obviously there'll be a 53 underneath, or maybe not obviously, but there'll be 53 underneath. Okay, so set the freehold property depreciation up and then select OK. Now, under here, then what I need to be seeing is that there's 5K here, and then there's 5K there. So, but I also need 5,000 here. So I'm not going to go back and do the 2021 figures. Okay. What I'll do is I will prepare a journal for the prior year, and I'll also prepare a journal for the current year. So I just need to go through and add those in. Now, for the actually, no, we could do it this way as well. This is quite quick and easy, nifty way of doing it. Now, let's say that actually this wasn't the first year, that there was a 2020 figures, but we won the client this year and we just hadn't imported the 2020 figures in. So we'll say that that 17,983 actually is the brought forward depreciation and depreciation, plus also the charge in the year. So we need 5221 here, and 5221 there, and 5221 there. Okay. And if anyone's wondering where I'm getting the 5221 from, remember a moment ago that on this document, we've got the difference there between those, of being 5221. And obviously for the ones that are very better at maths than me, you'll be able to visually work that out on the screen. So if we set it up the prior year and we want to quickly fix that, then it's easy enough for us just to go and double click in the prior year column, and you'll find your row there. So at that point, there's our freehold depreciation. Now, at this point here, then what we could do is we could go through and we could set these up and remove it from these rows. Now, when I do that, then I was going to put my minus 5221 there. At the bottom, then it's going to show you that I've got my unbalanced now by the 5221. So at that stage, I was going to clear down the actual brought forward balance. And then I'll see that will give me the difference of there 12,762.00. And make sure I put a minus on the front to show it's denote it's a credit. And then that will be dragged into the document. So I'm going to close this tab down now at the bottom, and that takes me back to the TV. And I'm going to perform the same thing here, but this time I'm going to prepare it through a journal rather than manually typing it in. Manually typing it in is as you saw, it's nice and quick and easy. The difference with it is it doesn't provide a nominal trail, does it? So what I could have done here is I could have gone to ADJ entries. I could have selected my new journal. From my new journal, I would change the journal type from normal just into reclassifying. And the reason I do that within this file is so I can pull out a nice lead sheet that just shows all the reclassifying journals. Again, it's useful in this year at the year-end file, and it's also useful when we go to year 2. So at this point, then I was going to do prior year depreciation charge 2, 3, 4, and try and get my typing working. There we go. Now, currently, though, the only issue with the way I've set it up is that that is not the prior year. This is going to be the current year. So I need to just change that by either just deleting back to 2023 and change it to 2022. Or you can use the calendar button, whatever really you prefer. Okay, so that's obviously the quickest and easiest. So now I'll go down to these. So we've got account 0015. Well, we know that's the charge brought forward. So I just want to add 521 to that. And then I want to go to my depreciation charge and add that 52,000. You can use the downward arrow there as well to select your account code if you can't remember it. But considering I only set it up a few minutes ago, it'd be a bit of a poor show if I couldn't remember what I set it up as. So on this point then, that will give me my prior year. Now, at that stage then, what I could do is set up the current year. Now, with the current year, we can see this is done on a straight line basis. And I can actually save myself a little bit of work in the year ended 31st of December 2024. So when I set the journal up for the current year, again, I'll change it to reclassifying. And again, just to be lazy so you don't have to see my terrible typing, I can just copy and paste the description in there and then update this to JavaScript. Yeah, okay. So once I set this up, exactly the same fashion, so 0015, add the 5221 in there, and then go down to 006, and then add the other side of the journal in. This time though, to make sure I don't have to set this same journal up for 2024, what I can do is change that to reoccurring. Now, there is one side of reoccurring journals that some people don't like, and that is that people may not check the amount in year 2 and year 3. With this being a straight line, I think we'd be a bit more confident to roll forward balances. However, if it was just a case that you want to set up a pro forma for, like, say, depreciation charges on a reducing balance basis for plant machinery or motor vehicles, you can exclude the amounts if you want to. Okay, so there's an option to roll forward with just a pro forma of the journal, which is quite snazzy. So that's the first time I've ever said snazzy on a webinar, and the last time as well. So pick and exclude there, select OK. And then at that stage, then let's go and have a look back in our DIAG document. So we're going to click on the home button. I'm going to go to other documents, and then on other docs there, I'm just going to go back to TB Diagnostics. Now, at this stage, then you can see straight away that I still got the areas obviously for plant machinery, and I've also got the obviously for depreciation cost and charge, but that freehold property depreciation now has been removed. If I go back into the accounts and have a look at the accounts document, well, the accounts document is going to look a little bit smarter now as well, because when we look at freehold property, there we go. We can see that charge for the year on owned assets being populated as 5221. And now also that balance, I'm not expecting everyone to remember exactly what that balance is when I opened up around the screen, but it's certainly changed. Okay. Now, all you do to work through the rest of the grid is do exactly the same process. Okay. So when you're in your caseware file, you'll go down to your DIAG. If anyone's caseware isn't set up, by the way, so you've got tabs like this, which I quite like, it makes it a little bit easier for me jumping back and forth, especially when you see I've got two files open. It can get confusing, can't it, when you've got two caseware account files open, which tab you're on. So I quite like having this set up this way. If you want your setup like mine, rather than having separate windows for everything, then you can go to Tools, Options, and then from Options, check your auto save out, make sure it's probably a little bit tighter than this. That's the default, by the way, by caseware. I have mine for every 15 minutes because I don't work on real accounts files anymore. So it doesn't matter if I lose a few things, but for you, it's a little bit more important. It's this setting here, by the way, for enable multiple document windows. The default setting is to have a tick in it for most of you. If you want tabs like mine, and then just remove the tick on it and then press OK, and it will set it up the same way as I can see on the screen. So with that said, then, you do know I've got a separate file. So I'm going to drag this set of accounts file over here, and I'm going to drag this one over here as well. And I'm going to just go through and drag a not completed example, but completed for these plant machinery. I've done exactly the same thing here for plant machinery. Okay, so I've gone through and I've built in an additions row. I've also built in a depreciation charge row as well. And again, if I go to the DIAG on this document, so other docs, TB Diagnostics, and oh, there you go. I need to close that down on the other screen. There you go. Just close that down. You can only open up one at one time. It's a virtual document, so bear with me whilst I. There we go. That should open up now without any issues. There we are. All right. So on this side here, then I'm going to view, and remember to get rid of the weighted content. Just remove the skipped rows, and you can see here now that's being addressed on the plant machinery as well. And if you look at the accounts, and we will be, you'll see when we go down to the tangible fixed asset note, that's cleared up. Generally, that is one of the larger areas that we'll receive support calls on relating to setting up accounts files for opening balances. So hopefully that gives everyone a bit of confidence of where you go and what kind of checks you can use to make sure that, okay, where do we need to look? Is it the depreciation charge and so on? So you, again, visual checks of your tangible fixed asset note. You all know what you're expecting to see here. Hopefully some movements for additions and bits and pieces like you can see here now. And obviously the depreciation charges there. If you don't see depreciation charges or additions, and it's the brought forward balances are exactly the same, there's an issue there with the mapping. Okay. All right. So at that stage, then, on this file, we haven't got that many differences left. We've still got this small statement of financial position difference for one. Now that's the same as what you saw in the other file earlier. Okay. There's still this small difference here between your net assets and your reserves. When you get to these differences, okay, my only recommendation for this small difference left here is that I wouldn't post any, I wouldn't try and clear that difference down until you posted all your journals. And the reason being is you're accountants and auditors, and you're going to be particular about decimal places, and you'll want things to be done accurately. So more than likely, most of you will post all of your journals with decimal places, which I would agree with. and you'll just create yourself more rounding errors. So make sure when you're clearing this, okay, these final ones, make sure that they're actually cleared as and when you get to the end of the accounts, or when you're going to make it available to review to your manager, or maybe from you to the client, or whatever the process may be. That's when you should look at clearing these. Okay, once you've cleared all those journals down, don't do it before, otherwise you may be chasing your tail clearing rounding differences. Now, with this rounding difference, it's really easy for me to go, okay, well, that £1 there, I'm going to clear that to other debtors. So you can just go to the rounding button here on table section and you can clear it dead easy. I'm not going to say that these tables aren't complicated, because the product team would disagree with me, and they'd be right to. But if you go down to the statements change in equity, the tables here are a lot more complicated. Okay, so the rounding tool here isn't designed to be applied to the statements changes equity. So when you're on your files, what we need to do is, if we have got a rounding issue, which we did, there's the 11404,402, and as we go down here, there's my 1104401. I can't just go, okay, well, it relates to this rounding button, and then the same rounding screen is going to pop up, but it has NaN in the difference column, so just not applicable on this note. And you can't do anything here. You can't use the drop down. So it's a very simple case of closing the screen. Now, to clear these differences here, the only way of doing it is preparing journals. Okay, so that doesn't answer the question of why we've got the rounding in the first place. And the reason we've got the rounding in the first place is the case where totals or rounds balances, or rounds individual rows. These tables are separate tables. The calculations building the closing balance and the opening balance aren't exactly the same, because the opening balance and the closing balance is looking at balances, obviously, for those related periods to get to the correct figures. So it could mean that the current year and prior year are slightly different, and in case where rounds them slightly different in that respect. So that doesn't help us, though, does it? Get rid of the difference between here and here. Now, the standard route to go down are these: is either we go back into our accounts file here, okay, and we can prepare a one-sided journal to add a few pence to like the prior year closing balance or the current year opening balance to get it to agree exactly, which you can do from adjusting journal entries. You would all seen, if you posted journals before, that rounding, you can go through and select one-sided journals. So I can go to my profit loss reserves, and that stays there. I can go through in the prior year and I can say, okay, well, there's minus 50p here. In case where will let me close this down within opening balance. I wouldn't do this first. If it was me, I would try something slightly different first, which is this: if you have got that difference within your statement change of equity, what I'd suggest is that we try and take off these decimal numbers before they go into the face of the accounts. So for our lead schedules, we keep the decimal numbers, but on the face of the accounts, we remove the 80 pence to 38 pence. There's a tool up here that some of you, or most of you, hopefully will have access to, okay? If you look at your own installations and you don't have access to this settings button, you'll need to have a chat with someone internally at your company, because it could be that they've restricted it from you, okay? But when you go to settings, once you've got access, or if you've got access, you can just go to automated case view rounding here, and you could select for the automated case view rounding to round to ones and to ones. What this will do is, before these figures are brought into the face of the accounts, they will automatically be rounded to whole pounds. So it will remove the decimals, which will remove a lot of the rounding issues that you see on the face of the accounts. So if I press OK here, I can now go back to my documents, jump into my accounts, and just to check really to see if this does clear down our difference. So wait for it to execute scripts. And when it does, then we've got 110442 and we've got 1104402. Let's have a look at my P&L. Well, on my P&L income statement here, so my profit and loss, and then going down to my balance sheet with my reserves, like there's my 1104402. So you can see it all adds up and agrees across statements now, which is the preferred choice, I'm sure. At that stage, then you can go, well, we have got this extra rounding in the prior year. but it's no longer on my statements as check change statement equity. I can't get my words out. So I can now just clear that all to my debtors row. And then once you do that, I can now go down to my debtors note and then clear that to, if I've got other debtors, which I do. I'm not going to clear it to other debtors, otherwise I'm going to have a -1 or a +1 in the prior year. But I could do this, I suppose, by the current year to other debtors, and then the prior year, I could go through and clear that to my trade debtors, couldn't I? If I said, there we go. Luckily, I've got my rounding button saved on my favorites, accidental, but it's there. Okay, so in that way, it's cleared those roundings down. All right, so a little bit better than rehearsal, only 1 minute overdue. I did see a couple of questions pop up, so I know there has been some questions that have come through. I'm not sure if there's anything that we can quickly answer, Tom, or...
I think there is something we can quickly just show the viewers, which is the question we had was, is there a way to see where you have allocated all your roundings to keep track? I did answer that in the Q&A as well, but just to point out where we've got the difference applied and difference to be applied in the map on the left-hand side.
Yeah, absolutely. So the little blue dots there will denote where you've applied the rounding to. So it's just a case of visually scanning down. If anyone's concerned that they see the difference applied here, this is just memo. This is just a memo at the bottom of the note. You can see it's in blue text. So once it's in blue text, as we know, blue text is skip text. So when we go to print, you won't see this on the print copy. Okay. Excellent. All right, then, in that case then. First thing, apologies for still overrunning. Hopefully a few minutes, that doesn't cost any time. Tom's got a few slides to go through, so there we go.
In terms of, thanks, Tony. In terms of questions, please feel free to continue logging those throughout the wrap up here, but you can also log questions in the feedback survey, which will pop up at the end, and we'll get back to you as soon as we can in the next day or so. Also, I'll point out, we did do a whistle-stop tour of rounding there in the last few minutes, but we do have all of that content that you saw is covered in a dedicated webinar that we ran very recently. So if you go to our help site or our YouTube channel, which I'll be signposting in a moment, then you'll be able to find that rounding webinar there. And as if by magic, we have the slide here just confirming the YouTube channel is the that on the right there, Caseware Client Services, or Client Services Caseware UK, should I say. We've got a playlist for webinars. This recording will be joining that playlist. Also, we've got quick vids there for bite-sized guidance. You can also follow us on our LinkedIn page, and that's to be kept up to date with the latest news, including upcoming webinars. And if we just jump to the next slide, we can see, as you may have done for today, probably did do for today, you can go to our events page at the address there, and that's to see agendas for upcoming sessions and to register to attend. Finally, we have the source of knowledge, that is the help site. I believe the next slide is for the help site. If you go to help.caseware.co.uk, you can view all of our articles and webinar recordings and accompanying information there. You don't need to log in to see that content. There is a login level for things like downloads, but for guidance, you just head to that site and you'll see the search bar at the top. And as I say, you'll be notified as attendees when the recording is available and any accompanying information. So only a few minutes over. Thanks very much, Tony, for the content. Thank you very much, everyone, for joining us. We hope you enjoy the rest of your day. Take care, and we'll see you next time.
Thank you very much, Aaron. Cheers, Tom.